Welcome to Profile Traders. This is Reza and you're listening to my analysis for S&P 500 E-mini futures. So going back, the last time we discussed this chart, we were still within this formation, which was a triangle confined by the line here and the line here. And then what we talked about is that if we were going to exit out of this range, we were most likely going to encounter significant resistance coming in between 82 to 93, which is a level that I did put on this chart a long time ago. And then you were also warned that if we would break above this 93 level, we really didn't have much before 2030. And we were also told to be ready for a very nasty and a very aggressive move after the Federal Reserve announcement would be released, because without no doubt this was the most important Fed announcement of the whole year. However, after having given sugar to the market, which was pretty much we do not touch the rates, because deep down we know that how bad the economy is, and also all this talk that we came up with hiking the rates was nothing but hype. And when it comes to decision time, we don't have the balls to pull the trigger. So you would have thought that with a rate staying as they are and not going up, we would have seen a very explosive move, which we originally saw. And that's where you see the spike in here. And then as soon as Madam Chairman got behind the microphone, the disaster started. It was one of the absolute worst Fed meeting interviews ever. Madam Chairman looked lost. Madam Chairman looked very confused. Madam Chairman was extremely uncertain about how to handle things, and this completely took the confidence out of the market and totally damaged the credibility of the Fed. As a result, what started to be a sugar high ended up being a very nasty trip on very nasty crack. All of the gains that we witnessed going from almost 1940 has been entirely reversed down. Now, why is it that we didn't go to 1230 or 2030, but rather we stopped at 2012? Well, the answer is extremely simple. If you go back in what I have put on the Twitter and some of the videos here, I posted this daily chart a long time ago, and I asked everybody to have a line connecting this low to this low. And I said, after this big drop, no matter how much we will consolidate here, once we're going to come and touch that line up there, it is going to be the mother of all sales. And that's the reason why it didn't go to 2030, because the technicians that were aware of that line sold it very, very close to that extremely important resistance level. Now we are in trouble, in big trouble. Why? The reason is what can you do now to the market that cannot or refuses to go up, even if you have a rate hike that did not happen while having been totally anticipated. All these years and these months after months, year after year, we saw market responding and responding and responding to the sugar high. Of course, the sugar high and the sugar daddy at the time was Benny, but now sugar mama is Madam Chairman Yellen. But in here it responded and responded and responded and responded almost for 7 years in a row. And now, trouble. What should have been a massive rally on the upside, for her not having touch rate and also having indicated that there is absolutely no certainty at all that she will even touch rates the next meeting, we should have seen an explosion back towards 2050 to 2100. But rather, we saw a very strong sell-off. This is a problem now. Now all eyes must be on this area here, which I would roughly sum up to 1930. Any given time that we break below 1930, the fall could become substantial and it could become quite exponential on the way down to a point where we could go retest these lows of 1850 we saw not too long ago. So this was a classic case of a triangle breakup which started by becoming and by looking good, and then it saw a very shrewd and a very brutal reversal to the downside, which has been extraordinarily damaging to anyone who went long. So expect this uncertainty in the markets to continue, expect volatility to be very high, and in the big picture, I think the fact that the market for the time being is not responding to sugar high, it's a major problem. So watch very closely 1930. 1930 now is the line in the sand. And to the upside, before anything convincing happens, we will have to again exit back up out of 1982, which is from where the last time the seller massacred the market. So 1980 major resistance, 1930 major support. Until one of these two levels doesn't break, we will continue this bloodbath of 40 points swing up, 40 points swing down, some days a little bit less, some days a little bit more. This was Reza with Profile Traders. Thank you for listening and have a great weekend.